Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. Now, there are a few names of mutual funds that become household favorites. And one group is, of course, Quant Mutual Fund, and its mutual fund schemes have been doing particularly well. I'm sure quite a few of you have invested in some of their schemes as well. And the other that gets spoken about every time somebody probably asks you if you're a reasonably experienced investor in mutual funds, which mutual fund to consider, then you'll probably, among the mutual fund schemes that you speak about, will speak about the Parag Parikh Flexi Cap scheme. Now, I thought, why not compare the two and see how they've done and where they should sit in your portfolio, whether you can compare the two and whether they have a distinct place. Should you really choose one over the other? And to talk about this in more detail, I'm joined by Rishabh Desai, who's the founder of Rupee with Rishabh Investment Services, as well as Santosh Joseph, who's the founder of Germinate Investor Services. Thank you so much to the both of you. And I'm sure that this is going to be a very insightful conversation. I must point out that we've pulled up some data points. So while you're speaking to us about the difference between the approaches that these two mutual fund houses have, particularly in the Flexi Cap category, we will pull some of that data up. But before I go to you, Santosh, on the key differences between the two, I just want to point out, we've pulled up the 5-year returns, and I asked my producer to pull that up while we're speaking about it. Quant has achieved a return of 30.73%, and Parag Parikh has returned about 25% in that time. Of course, the difference is 5 percentage points, which would amount quite a bit, but they both stand at the top of the Flexi Cap category, and they've done incredibly well over that 5-year period. I'll come to you first, Santosh. What do you make of these two, and how do they differ from each other in their approach?
Hi, Alex. First of all, I think both of them have done a phenomenal job at helping investors grow their money. Now, both the numbers, anything over 20 is a huge bonus. In fact, on a 5-year basis, to do 25 and 30 is exactly what investors would like to. In fact, the contrarian styles that both of them have is actually a boon for the investor because they don't have to go for the versus debate. You got both doing so well that, when you're in there, you get the best of both worlds. Now, when it comes to looking at their styles, there is a very, very distinct, tangible difference between how a Parag Parikh has positioned itself and how Quant has positioned itself. In fact, when you look at any reading material of Parag Parikh, you'll hear from them saying that do not come for short term, think long term. The ideal holding period is for 5 years, and they got some nice disclosures over there. On the other hand, Quant is the guy who came in and changed so many conventions about how funds are managed, and they're topping the charts. So I think both of them have a significant value play in terms of an investor's portfolio to benefit from, especially in the extremely dominant diversified equity flexicap category.
You want to add to that, Rishabh, about the kind of approach that the two have, and what do you make of their performance so far?
Hi, Alex. First of all, thanks so
Hi.
much for having me on the show. See, they have been very, very clear, both of the AMC. See, first of all, let's understand that today investors have become very smart, Alex. Okay, and ultimately, even today, see, regardless of how well their philosophies are, investors are eventually going to run after returns. Let's not forget that. Okay, so what you have seen is the returns is actually a byproduct of the broader markets which have rallied so substantially. Of course, there's no doubt about that both of the managers have done phenomenally well. See, let me put things a little in perspective. Parag Parikh has been very consistent in their philosophy, which they have been very clear that they manage a value style approach towards managing their funds. And on the other side, Quant is more of a blended strategy, which is mix of growth, momentum, and value. And let's not forget that Parag Parikh has maintained a low churn. It's more like buy right and sit tight for the long term with a mix of both Indian equities and foreign equities. Say like around 5-6 years back, Parag Parikh was sitting on around 30-31% exposure in the US markets, which helped them really boost their returns. And on the other side, Quant has churned their portfolio quite aggressively and taken super tactical calls, like timing the markets very precisely, and which has helped them deliver the returns what we see. So both in a way in are actually going to complement each other in different cycles. See, in the history we haven't seen value as a segment doing so well for 4.5 consecutive years, Alex, right? On the other side, we have also seen momentum also doing very well.
I don't want to take a look under the hood as well of both of these schemes, Santosh. And it's quite interesting because we were pulling up the number of stocks that each of them hold. And it must be pointed out that Quant's assets under management, despite the kind of interest that it has managed to generate with investors, is much smaller than what Parag Parikh has. And Quant had, as per the last count, 22 stocks in its Flexi Cap category. And Parag Parikh, meanwhile, had 57. And there's a quite considerable difference. But interestingly, the allocation to the top 10 for both of them is 56.86% for Quant and 54.1% for Parag Parikh. So what do you make of the kind of strategies that they've employed to build their portfolios?
Well, to begin with, when you look at Quant and Parag Parikh for the outsider, there's so much of similarities that one can go by. If you look at the large cap exposure, both of them have a 70% large cap exposure. If you look at some of the top 3-4 stocks, they could be, some names that are familiar across the board. But beyond that hood level, when you look at it, that's where the difference comes in. Now, a simple thing that Parag Parikh does not hesitate from taking a very strong cash call or sometimes even a contrarian call on a particular stock or even a particular sector. On the other hand, you see Quant goes extremely aggressive on chasing the momentum and getting and squeezing the most out of the market opportunities that are present. So you see there are diametrically opposite, though at a superficial level they look similar. There is a clear case of a style divergence as you go digging deeper. A simple aspect even now is that Quant is purely playing on domestic Indian equities and the opportunities thereof, whereas Parag Parikh says, hey, listen, I'm going to play on the domestic opportunities, but I also want to play a little bit on the international opportunities where there's a huge value at play. So the style, the top holding, including even the large cap being 70% common. When you look at mid cap and small cap, as we look at data recently, Parag Parikh has got exactly 5 odd percent in mid cap and small cap, whereas Quant has extracted the maximum juice out of the small cap and the mid cap rally by having a slightly higher exposure, which is what flexi cap funds allow you to do. In fact, even as we speak, flexi cap at Quant has got a 15% exposure to small cap, which is the discretion that the fund managers exercised, and that's why you notice that on a 3-year, 5-year, the outperformance just between the two relatively is visible in Quant's performance.
I also want to point out that we've taken up the 1-year rolling as well. So over 5 years, we've taken the 1-year rolling, and the gap is very substantial when you look at the rolling returns. So Quant's rolling returns over 5-year period, 1-year rolling, is 44%, whereas Parag Parikh has managed a close to 30% return. The category average, by the way, is 25%. So both of them are very substantially beating, but Quant has managed to beat it even further. And I guess to a certain extent, Santosh, the kind of approach that it has had to the broader markets and also its momentum play, Rushabh, the fact that momentum has had such a big hand in the equity rally over the last 2.5, 3 years has boded well for Quant as well. What do you make of the cash utilization though? Because if I look at the kind of holdings that they have, while Quant does not have as high a holding in cash as Parag Parikh, it still has a substantial amount of cash at 8.8% at last count. And with the debt allocation as well, it stands at just over 10%. So that compared with a Parag Parikh, where despite the kind of fall that you saw in the equity markets last month, it ended with debt plus cash of close to 20%. So what do you think about taking cash calls? The fact is that these two fund managers have not shied away from taking those cash calls.
Absolutely, Alex. I mean, if you see the history of both of these AMCs, If you minus the Flexi Cap fund today, which is not sitting on too much of cash in the Quant Flexi Cap fund, but if you see the other schemes in the Quant stable, they have taken very aggressive cash calls from time to time. Okay, the reason why I feel at this point of time, see, as mentioned earlier, that Quant is following a mix of value growth and momentum. So maybe they feel at this point of time that, if you see the underlying market capitalization of Quant Flexi Cap fund, it's more tilted towards large cap, and same as the Parag Parek Flexi Cap fund. So maybe Quant feels that there is good margin of safety, which we also feel in the large cap segment. And probably the positioning of the stocks may be in such that it is meant to capture the upside momentum, when this market correction ends. On the other side, if you actually see, Flexi Cap, the Parag Parek Flexi Cap is following a value oriented strategy. So, it is bound to take little more cash calls because they want to buy, stocks which are of very deep value, and they may not perform in the short term, but they are surely bound to outperform in the medium to long term. So, which you just mentioned, you pulled out a 1 year rolling data. Momentum always does well in short to medium term. And on the other side, Parag Parek Flexi Cap, which is a value oriented fund, it may not do well in short to medium term, but it may do aggressively well, in the long term. So I truly feel, both of these strategies are positioned in such a way to capture the short term upside opportunity, medium term and long term, Alex.
Rishabh, we're having a little bit of a trouble with your line, and so I'm going to ask my team to try and fix it. In the meanwhile, let me stick to you, Santosh. Any point really looking at the sector allocation and the positioning here, or is it the fact that both of these fund managers are more to do with the stock picking approach, a bottom-up approach, and so therefore it's not really relevant to look at the kind of sector allocation that they have?
No, I think the sector allocations and even the stock picking approach become, intertwined into one strategy. While we're talking about cash, we just talked about the percentage of difference between cash holding. In Quant, the cash is actually represented through the ultra large caps that they hold in the portfolio, which are highly liquid and which is actually a proxy for cash. Now, similarly, in the last 3 to 4 years, when you had a really buoyant market, the sectors that you chose and the overweight position that you had made all the difference. So I think we have to give it to both the portfolio managers. They've been extremely nimble, agile, as well as been dominating the game by playing the sector and overweight on the stock within the sector really well. See, if you don't choose sectors well and within the sector don't play those alpha stocks well, you really cannot have this outperformance. So I think credit must be given where it is due, that at Quant and at Parag Parikh, these guys have not missed out the key sectors that have contributed. And even in case of choice of sectors, they've actually gone ahead and taken that overweight position where some of the other people have not felt comfortable. And third point, even between the market caps, they have, played that, that entire construct to the hilt, where between mid cap and small cap and large cap, they've ensured that it is all done well for reaching the outperformance that the funds have delivered.
Just to follow up with you then, how do you decide how to position this in your portfolio? And the thing about Parag Parikh is that what a lot of investors who've stuck with them for the long term have been used to, and you spoke about it, or I'm not sure if Rishabh did, but that overseas equity allocation, which used to be about 30%, which at last count has actually fallen quite dramatically, and currently I think at last count stood at 12.4%. And they've said that they're not going to be allocating fresh capital into international because of the restrictions that are under or that are faced by the entire industry. So does that have a bearing on how you would position this in your portfolio, and how do you look at both of these as part of a portfolio? Santosh.
So to begin with, that international exposure has always added an edge to the way Parag Parikh FlexiCap has been
Yeah.
seen by investors. In fact, for many people, this was like a bonus feature that you invested in a well-run domestic FlexiCap fund, and equity was international equity was coming in as a bonus. And not to forget that bonus that you got as an exposure was also helping the performance of the fund because they are value seekers and therefore they're not shy of searching for value both domestically, internationally. Number two, whenever they felt uncomfortable in terms of valuation, they've not been shy to stay away from the markets by holding cash or taking contrarian bets. Now, this is what has made Parag Parikh size balloon to what it is. In fact, I think if you do apple to apple comparison, the Parag Parikh fund would be about 10 times bigger than the Quant fund. But as we look at data today for investors, though Parag Parikh does offer the extra advantage of international equity investing, but if one were to not take that into consideration and look at both the flexi cap funds, they still offer a compelling choice for investors to have both of them into the portfolio because remember, beyond the performance, there are different styles that could work in an investor's favor: pro cyclical, pro momentum, pro growth, pro value. I mean, there's a beautiful mix happening there when you just put these two schemes into your personal portfolio.
Okay, fair point. All right, so both is what you would say. I saw an interesting note, Rishabh, from somebody from the mutual fund industry speaking about the kind of calls that a fund manager would take and outperformance on account of something like a cash call or outperformance on account of something like an international exposure, and comparing it with peers may not necessarily be appropriate, and to say that maybe you should be picking a different benchmark. Don't celebrate the outperformance. But does the investor really care? Ultimately, it's the return that they take home that matters, right, at the end of the day. And so from that perspective, what would you do with a Parag Parikh Flexi Cap and a Quant Flexi Cap?
Alex, you absolutely hit the nail. Let me put a little bit, or give you a little bit of a perspective. See, there are two sides in the industry. One who are saying that okay, cash calls are good, and the other side is saying that okay, we don't want to take cash calls. We want to be 100% invested in the equity markets. See, ultimately, in the end of the day, investors want is returns. Okay. See, as long as the fund is outperforming the underlying benchmark. See, the reason why I'm saying is outperformance is because in active management investors and we are paying an additional expense ratio for them to outperform the benchmark, right? Might as if they are not able to outperform on a 7 or a 10-year rolling basis, then I would actually go for a smart beta or an index fund, right? So I think whether a fund takes cash calls or no, that's none of my business. I ultimately want the fund to outperform on a long-term basis, either on the 5-year, 7-year, or on the 10-year. And as Santosh also mentioned earlier, that that both of these products actually in a way complement each other and fit beautifully well in one's portfolio. I would suggest giving, because see, rather than concentrating only in these two funds, it's better to have a good mix of say probably 4 5 funds in your portfolio which can blend in, because it is very natural and normal for the funds to underperform from time to time. Maybe Parag Parek may go underperformance for a little longer compared to Quant Flexi Cap, so I think there will be performance, but in cycles. But this is how I would pick, is going in a diversified way and not concentrating too much on one product, Alex.
So have both. I think that's a consensus view. It's time to jump into the queries. We've got some very interesting ones. The first one I'm taking is from Mudassir, who's 40 years old and who's investing 2.25 lakh rupees a month across 5 mutual funds. And he's named them. He's named, by the way, Parag Parikh Flexi Cap Fund, Quant Large and Mid Cap Fund, Motilal Oswal Mid Cap Fund, as well as the Quant Small Cap Fund and PPFAS ELSS. His expectation is that he wants to buy a house in 10 years' time, and his return expectation is quite moderate, actually, Santosh, at 12 to 15%. So he's wondering whether or not it's going to be sufficient. Just back of the envelope calculation, even if he does not get any returns, he's going to accumulate 2.7 crore over that 10-year period. I think he's going to have more than enough to buy a house, wouldn't you say?
It just depends in which neighborhood is buying a house, I think. Because just by what you said, 2.7 crores is what he'll collect money in about 10 years. And at higher end at 14-15%, the money should at least be 2.5, 3 times. So that money should be between 5.5 to 6 crores. So I think in most cities, you should be able to get a reasonably good home for that value. Now, it could be that towards the end of 10 years, maybe the markets are not in favor, then you may have to wait out another year or so. But I think, Mudassir, it's a great strategy. And I think for most of the people watching, this is a great way rather than get entangled with an EMI. If you're able to do an SIP for 10 or 12 or 15 years, you'll be able to comfortably cash down, buy the home of your choice, and as well have enough corpus for you for your financial security. So I think you're in good shape, Mudassir. You should just continue.
Okay. All right, good shape and good choices from what I can glean from what Santosh is saying. Abhishek Sharma is asking, he's 32 years old. What are the long-term consequences, Rishabh, of not rebalancing a portfolio? Are we going to miss out on returns if portfolio is not rebalanced? It's an interesting question because what tends to happen is in a period of underperformance, your equity component of your portfolio is going to drop. In periods of outperformance, it's going to rise very dramatically. Is there a problem with not rebalancing?
See, Alex, it really depends on how the portfolio is being constructed, right? Whether it is a mix of active, passive, or purely active or purely passive, which I don't know. So if the fund selection is done well, even if he forgets the portfolio for the long term, I think it should be fine. I mean, this is usually what we recommend, right? I mean, there have been investors, there have been clients who have actually forgotten their investments for a good amount of years, and they have been shocked to see the amount of money which has grown actually. So if because he's young and he has a very long time ahead of him, I think forgetting the portfolio, from at least a 5-year point of view should be fine. I mean, see, let me put it in this way. Ultimately, it all boils down to one's risk. Now, if I'm able to stomach volatility and if I'm able to stomach that much of risk, what my portfolio has become, say if my original allocation into mid and small caps was say 50%, and over the long term it has grown to probably say 70% or so, and if I'm comfortable with the risk what the portfolio has to offer, I don't think there is any need to churn the portfolio unless and until if a fund or a strategy is underperforming very significantly. So my answer, if the portfolio is well constructed, I don't think there should be any consequences. But of course, a yearly review of whether you are able to achieve your goal or no, or whether you need to top up the money, I think that is something what one needs to look at.
Okay, fantastic. All right. The next one that I'm talking about is Rian's question. He's investing 20,000 rupees a month. Will it give him sufficient funds for his retirement in 20 to 30 years? Santosh, it would normally be a fairly innocuous question or something that a lot of people would ask, except that I must point out that Rian is currently 21 years old. So he's planning to retire at between 41 and 51, which is fair. But he's talking about accumulating 3 crore over that period of time.
So I think, Rian, the easy answer for you is your 20,000 SIP at 21 is a phenomenal start to a long goal that you have. So the easy way to look at this is, in 30 years, you would have saved up about 75 odd lakh rupees, and that money will easily, even at 12%, be well over 3 crores. But I think if you want to retire early, look at when you hit the 3 crore number, because if that is the number that you're going for, you may be surprised and you may retire a little earlier than usual. And also remember, at 21, if you're able to save 20,000, there will be a point when you're 30 and 35, you'll be able to save a lot more than just 20,000 a month. And therefore, your retirement goals is like the message in the mirror will appear or happen faster than you can look at things.
Yeah, that's a fair point, Santosh. On that note, and Rishabh, thank you so much for joining me for what has been a very insightful conversation. Pleasure having you on the program as always. All right, and that brings us to the end of this episode of the Mutual Fund Show. Hopefully you found it useful. Let us know what you think on the comment section, and don't forget to write to us on that WhatsApp number that has been flashing on the screen through the show. Do stay tuned, lots more coming up on NDTV Profit.